Hi everybody, this is Dean. Today we're gonna look at the economics tab on Koyfin. So if you're interested about Koyfin, you can get 20% off in the description below. This tab is called the World Economic Dashboard, and you can find it on the left menu in the market dashboards of Koyfin. It's called World Economics, and it's pretty simple. Actually, it's the most simple. I guess I don't know if it was done intentionally or not to keep it that simple, because they could definitely gone a lot deeper, especially considering all the economic data you can find on Koyfin. So it's pretty simple, but at the same time, I'm wondering if it's not intentional to keep it simple, to keep it, for example, they could have put all countries instead of this smaller list of big countries, but maybe that's by design. So in terms of list of countries available and data points, columns, they kept it so simple that, as you can see, it doesn't even fill the whole screen. However, it's pretty good in the sense that it draws you back to what's important here. You know, you don't need to go and find some sort of really niche economic data point about Bulgaria or something, because it's a tiny economy anyway, so it doesn't have much impact. The thing I'm trying to say is that if you look at the macro picture here, you shouldn't really waste too much time on things that are not really important, and keep your head in the things that are. And so having this small list of the bigger economies and the main economic indicators that matter most is a good idea in that sense. So what do we have? First of all, let's organize things by GDP, shall we? Though this is in USD. As we can see, at the top we have the United States with a GDP, so I guess these are the 2023 numbers. 27 trillion US dollars, the United States GDP, which is the biggest in the world, followed by China with 17 trillion US dollars. Then the Eurozone with 15 trillion US dollars. Then we have Germany, 4 trillion, Japan, 4 trillion, India, 3.5 trillion, the UK, 3.3 trillion. Funny that India is just in front of the United Kingdom as its past colonizer, right? And then we have France, 3 trillion, Italy, 2.2 trillion, Brazil, 2.1 trillion, Canada, 2.1 trillion, Russia, 2 trillion, Mexico, 1.7 trillion, Australia, 1.7 trillion, South Korea, 1.7 trillion, Spain, 1.5 trillion, Indonesia, 1.3 trillion, Turkey, 1.1 trillion, and Switzerland, 800 billion. Okay, so this is great to come back to the fundamentals, guys, and really appreciate the numbers and look at them for what they are. Back to basics is always good to, keep it grounded and come back to these numbers, a few years, every couple of years to get back at the main picture here. Let's look at the GDP growth, right? These are the static numbers of the year 2023. What was the actual growth year on year? So this is from 2022 to 2023. The highest growing country was actually India with a 6.7% year on year growth. So you have to really understand what this means. India grew from 2022 to 2023 at a 6.7% growth rate, which they then arrive at 3.5 trillion So imagine how much 6.7% represents in US dollars. Hundreds of billions of dollars. This is huge growth for India. And unfortunately, that's probably my complaint, is that we don't have any economic surveys like PMIs on this table. However, you can find them by searching for them in Koyfin or create a dashboard for them. Now, my point is, India's PMI is the one that is exploding the most. It's around the 60 mark, and anything above 50 is great. Means the economy is growing, and you rarely get any countries above 55. But India has been at 60 every month for the last year or so. Obviously, insane growth in India. After that, we have Indonesia, 5% growth, very big. Then China, 4.7%, Russia, 4.1%, Brazil, 3.3%, Spain, 3.1%, the United States, 3%. Let me just come back a second here on Spain. 3.1% is massive for a European country. And again, if we look at the PMIs, Spain is doing quite well, actually. And I personally have put on a spread trade where I was long Spain, short France, and that has worked out quite well. Back to my numbers. Turkey 2.5%, South Korea 2.3%, Mexico 2%, and then you have all the 1% and close to anemic growth like the UK 0.7%, and the Eurozone, as you can see, the average for each country, the average of the Eurozone countries is 0.6%, not great. Germany minus 0.1%, and Japan minus 1% growth. Okay, then we have the CPI, which is the inflation. At the top, we have Turkey with the Turkish lira with an inflation rate of 50% per year. 50% per year. So every year, the Turkish lira is worth twice less. That's Erdonomics for you. Then we have Russia around, let's call it 10% inflation. Mexico 4.5, Brazil 4.4, Australia 3.8, India 3.6, Japan 3%, the US 2.5, and then anything below 2, which is good or not necessarily good. It's kind of a deflationary as well. So the best is really around the 2%, and that's where it's usually considered healthy, and that's what the central banks of the world are aiming for, really, is to be around that 2%. Now there's the CPI and there's the core CPI, which exclude certain items like petroleum and things like that. We have retail sales. You can look at that in this manner. We have the industrial production per country. Switzerland very high because they make all the watches and chocolate, but not necessarily mean that everything is rosy there. But look at Japan, -4. Turkey, Italy, their industrial production have been declining recently. The policy rate is the central bank rate. So in the US would be the Fed fund rate. And this is the interest rate set by the interest bank, and then all the different government bonds and all the bonds really will then set their own interest rates based on that rate. Turkey 50%, Russia 19%, Brazil 10%, Mexico 10%, India 6.5%, Indonesia 6%. So these are very high. The US 5%, although we have had a meeting with Jerome Powell recently in September, where he said that he would bring the interest rates down by 50 basis points, if I'm correct, which means 0.5% down to 4.5%. So you can expect this number to gradually come down in the next couple of months and years. We have the 10-year yield, which is the government bond yield. You can look at the previous video where we talked about global yields, very interesting topic, where we talked about yield, and this is basically the government bond, which is different from the policy rate because this is subject to market conditions. So this will fluctuate every day depending on who's buying or selling, or if people want or don't want the bonds on the market. And so this yield will be depending on the market dynamics. We have a government to debt to GDP. The top we have Japan, 255%. So the debt of Japan is 2.5 times the size of its annual GDP. And obviously that's not great. You want to have a place much more fiscally responsible, and that's why maybe the EM countries here, as you can see, anything starting from China, right, they have an 80, so this ratio is much healthier, right? The debt is 0.8 times their annual GDP, which is way better than anything above here. Think about it, Italy 1.3, the United States 1.2, France 1.1, and that is actually going to increase massively in the next couple of years because their government budget is out of control. I know because I'm in France right now and I've seen the news. It's not looking good. However, the emerging markets are considered a bit more fiscally responsible. That means they simply stick to their budget and they don't overblow their spending, and so their debt is under control relative to developed regions like in Europe and North America. As you can see, like China, India, Brazil, they all have something under 100%. Mexico, 0.4%, or 49%, 0.4 times GDP. South Korea, 49%. Indonesia, 39%. Australia, 43%. Switzerland, 38%, not part of the European Economic Union, so therefore they are a bit doing their own thing here. And then Turkey and Russia. Now, these two are not fiscally responsible, okay? You may think, wow, they don't have any loans, so they have a very good balance sheet. No, their interest rate, remember, is at 50 and 20%. And their 10-year government yields is 29 and 16% respectively. That means it's too expensive for them to have loans, because it costs Turkey 30% interest to get a loan. So obviously insane price for a loan. So obviously it's not in their interest, quote unquote, to make bonds and issue debt. Same for Russia, right? First of all, nobody wants their bonds. Nobody wants to loan money to Russia, and even if they do, they will ask a 16% interest rate, which is insane. So too expensive to borrow money for these two countries. That's why their debt to GDP ratio is very low. We also have the current account to GDP. We have the jobless rate, a bit overhyped metric, if you ask me. If you turn on the business news, it's all about the unemployment rate, etc., etc., etc. That's all they talk about all day, every day. Yeah, it's kind of relevant, but I think it's a bit overhyped in terms of macro. But you can access this number here. However, more importantly is actually the population size. Now, that's a real data point that matters if you're thinking long term, but not even that long term, right? But that's a really important metric to consider when you look at an economy. Obviously, China at the top at 1.41 billion inhabitants. India following 1.39 billion. The Eurozone 350. The United States 335. So that surprised me. I thought the United States was bigger than Europe in terms of population size, but apparently not. And I'm not sure that what do Koyfin include in the Eurozone. Usually the Eurozone means the European currency area, so countries that have euro as their currency, because there's a lot of European Union countries that do not use the euro, such as like Poland have the Polish zloty, Hungary has the Hungarian forint, Sweden has the Swedish krona, etc., etc. So there's a lot of European Union countries that don't use the euro. So when you say the Eurozone, means the European countries that use the euro as their currency. So maybe this number is not representative of the European Union. It's probably much bigger, actually, the European Union and the Europe geography as a whole, right? If you include the UK and other countries like Norway that are not part of the EU, this could be a much bigger number. And I was surprised that it's bigger than the US at 335 million people. Indonesia, 278 million people, huge number. It's the number 5 on the list. People don't talk about Indonesia as much as they should. It's kind of under the radar, but it's a huge monster. I think it's one of these countries that will be talked about more and more and more and more. Indonesia, a place to look out for. Brazil, 216 million. Russia, 146 million. Pretty populous country, Russia. Mexico, 128 million. Same again, Mexico. Who would have thought that in terms of population size, these are the places that will have very interesting economic growth in the next decades. Japan, 124 million people. And again, you have to look at the population constituents, right? Is this a young population or an old population? Well, in Japan, it's an old population. In Europe, it's an old population too. So while the others, if I skip the United States here, it's more of a younger population. Although China is a bit of an aging population too. But Indonesia, definitely young population. Brazil too. So very dynamic places to look out for. Turkey, 85 million. Again, it's a hugely populated country, and I don't think people realize that. Germany, 84 million. France, 68 million people. The UK, 67. Italy, 58. South Korea, 51. Spain, 48. Canada, 40. Australia, 26. And Switzerland, 8.969 million people. So there you go, guys. This is the table. It's a bit too simple, but don't be fooled by its simplicity. It's good to go back to the fundamentals and look at the numbers, appreciate the numbers, look at the sorting tables and compare the different regions, and then you'll appreciate and learn something new every time you come back to it. So guys, I invite you to check out this tab, and I will see you in the next video.